If you watched my video yesterday, you would know I was right. Euro to US dollar is sitting at 1.1386. For timeframes, monthly, weekly, daily, and 4H are all flashing sell. The dollar is getting a safe haven bid from US-Iran tensions, oil is holding above 85, and the market is pricing in a 62% chance of another Fed hike by September. But here's the thing. The herd is already short. And when everyone's on the same side of the boat, that's when it flips. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Let's declare the bias right now. This market is bearish trending, but we are approaching a critical support zone where the entire structure could reset. Write this number down. 1.1393. That's the first level of support. If we break below 1.1373 with conviction, the entire daily structure flips to a deeper sell-off targeting 1.1260. That's the invalidation level that changes everything. But here's what the herd isn't seeing. The consolidation range around 1.1410 is practically complete. We are at a decision point. The market has been compressing like a spring, and the release is coming, probably within the next 24 to 48 hours. The problem? Everyone's positioned for the same move. COT data shows speculative shorts are piling in. That means any upside surprise, a cooler CPI print, a dovish Fed comment, or even a headline about peace talks, could trigger a violent squeeze. Let's walk the chart. Starting with the weekly, this is where the structural story lives. The weekly trend is strong sell. Price is trading well below all major moving averages. The MA50 sits at 1.1509, the MA100 at 1.1572, the MA200 at 1.1572. That's a lot of overhead resistance. Any rally is going to face a wall of sellers between 1.1413 and 1.1433 on the daily. The picture is the same. Strong sell. Price is below the MA5 at 1.1407, the MA10 at 1.1411, and the MA20 at 1.1439. The RSI is at 37.68. That's oversold territory, but not extreme enough to call a bottom. The MACD is negative at -0.004, and while the histogram is flattening, we haven't seen a bullish crossover yet. The 4H chart, same story. Strong sell. Price has been grinding lower in a descending channel. The 9-day EMA sits at 1.1425, and the 50-day EMA at 1.1521. We are holding just above the 9-day EMA, but the RSI at 45 tells us any rebounds lack momentum. Now the 60-minute, also strong sell. The intraday structure is telling us we are in a tight range between 1.1373 and 1.1413. The pivot is at 1.1401. Above that, we target 1.1413, then 1.1421, then 1.1433. Below it, we are looking at 1.1393, then 1.1381, then 1.1373. Here's what most traders miss. The MACD on the 4H is showing a hidden bearish divergence. Price made a higher low, but momentum made a lower high. That's a continuation signal. It tells us the downside isn't done yet. But the stochastic is turning up from oversold on the hourly, which suggests a short-term bounce. Could be coming first. Now let's connect the dots on the macro side. The dollar is gaining because of 2 things, safe haven demand and the Fed's hawkish repricing. The US-Iran conflict is escalating. Iran struck US military targets in the Gulf, and Brent crude is holding near $85 a barrel. That's a classic dollar-positive dynamic. Geopolitical uncertainty drives flows into the greenback. But the real story this week is CPI. US inflation data drops, and it will determine everything. Here's the consensus. Headline CPI is expected to show a monthly decline of 0.1% after last month's 0.5% increase. But the year-over-year rate is still elevated at 4.2%. A hotter print? That reinforces the case for another Fed hike before year-end. Goldman Sachs just cut its euro to US dollar forecast to 1.12. BofA is also bearish, seeing the pair at 1.12 by Q3. If CPI comes in hot, we could see euro to US dollar below 1.12 and the dollar strengthening across G10. A cooler print? That changes everything. It would increase pressure on the dollar, allowing the euro to test resistance at 1.15, a level it hasn't breached since late February. The cross-asset linkage is critical here. Euro to US dollar has an inverse correlation with the US dollar index, which has been particularly aggressive throughout 2026. And the DXY is testing the midpoint of its 2022 to 2026 declining channel. The next move in the dollar determines the next move in the euro. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus most. People skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 setups. 2 scalps. 1 swing. Each with exact entries, stops, and targets. And I'm putting the trade cards on screen so you can screenshot them and execute. Strategy 1. The opening scalp. This is a high probability scalp on the 5-minute structure right at the intraday support level. We are looking at 1.1381 as the trigger. That's S2 on our levels. If price taps 1.1381 and prints a bullish engulfing candle on the 5-minute, or a clear rejection wick, we enter long entry. 1.1385, confirmed by the 5-minute bullish engulfing after the tap. Stop loss. 1.1373, that's S3. We are risking 12 pips. Take profit 1. 1.1401, the pivot. That's a 1-minute and 1.3 seconds risk reward. Take profit 2. 1.1413, R1. If momentum accelerates, that's a 1-minute and 2.3 seconds risk reward. What instantly voids this scalp? A 5-minute candle that closes below 1.1373. If we see that, the structure breaks, and the scalp is off. This scalp works best in the first 2 hours of the London or New York session when liquidity is highest. The opening SCALP entry. 1.1385, 5M bullish engulfing after tap, stop loss. 1.1373 take profit 1. 1.1401 take profit 2. 1.1413 risk, reward. 1:1.3 R to 1:2.3 R invalidation. Void if 5M candle closes below 1.1373. Strategy 2. The liquidity grab. This one is for the counternoise traders. We are hunting a stop-loss sweep, a fake breakout that takes out the weak hands before reversing. We are looking at the 15-minute chart. The liquidity zone is just below 1.1373. That's where the stops are clustered. If price sweeps below 1.1373, triggers all the stop losses, and then quickly snaps back above 1.1381 with a bullish engulfing candle, that's our entry. 1.1385, after the fake breakout below 1.1373 and snap back above 1.1381 on the 15-minute, stop loss. 1.1365, that's 10 pips below the sweep low. We need room for the wick. Take profit. 1.1413, the first resistance level. We are targeting the nearest intraday liquidity pool. Risk reward. Approximately 1 minute and 2.8 seconds. We are risking 20 pips to make 28. The warning here. This requires fast execution. You need to be at the screen, watching the 15-minute chart in real time. If you hesitate, you miss the move. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. To the liquidity grab entry. 1.1385, 15M fake breakout below 1.1373 plus snap back above 1.1381, stop loss. 1.1365 take profit 1. 1.1413 risk, reward. 1:2.8 R invalidation. Void if price holds below 1.1373 for 2 consecutive 15M candle. Strategy 3. The session swing. This is the trade that captures a multi-session move. We are aligning with the 4H and daily bias, but we are waiting for confirmation before entering. The trigger, a 4H close above the MA20 at 1.1439 with a bullish MACD crossover. That's the signal that momentum is shifting. Entry, 1.1445, After the 4H close above 1.1439 and MACD bullish crossover confirmation, stop loss, 1.1365, that's below the daily structure and below the recent swing low. We are giving it room to breathe. Take profit 1.1500, the psychological level and the first major resistance. Take profit 2, 1.1580, the upper end of the recovery channel. Risk reward. We are risking 80 pips to make 55 pips on TP1, that's 1 minute and 0.7 seconds. But TP2 gives us 135 pips, that's 1:1.7. Trailing stop rule. Once price reaches 1.1470, halfway to TP1, move your stop to break even. Let the trade run. The invalidation level that would shift the medium-term outlook, a daily close below 1.1360. If we see that, the swing thesis is dead and we are looking at 1.1260. The session SRNG entry, 1.1445, for H close above MA20 plus MACD bullish cross, stop loss, 1.1365. Take profit 1, 1.1500. Take profit 2, 1.1580. Risk, reward, 1:0.7 R to 1:1.7 R. Invalidation. Void if daily close below 1.1360. Never risk more than 1% to 2% per trade. On these scalps, I'd go even tighter, 0.5% to 1% maximum. Remember, we are trading around a major data release. The CPI print could cause a 50 pip gap in either direction. No positions through the high impact news. Stops are non-negotiable. This is how you survive to trade the next big move. Let's summarize the single most critical level for the next session. 1.1393. If we hold above that level into the CPI print, the squeeze could send us to 1.1450 and beyond. If we break below 1.1373 with volume, the next stop is 1.1260. That's the level that separates winners from losers tomorrow. If this level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now if you want. The full breakdown on trading commodities, the Aussie, the yen, the pound, and Bitcoin. The videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.